Ladies and gentlemen of the crypto space, we're live on a Monday, March 11th at 11:30 a.m. So, Bitcoin breaks an all-time high. You're always going to have new all-time highs, and all-time highs don't interest me that much. But what's pertinent is this is a solid push past the threshold of all-time high of previous cycles. So this is a bit of a confirmation. And for me, I think in the longer time frame. So it's not like it just breached all-time high. What's pertinent is on what time frame, monthly, weekly, but you want to a sustained repricing above the threshold. And all things point to this particular cycle as being quite interesting compared to past cycles. History rhymes, it doesn't necessarily repeat, and a lot of things point to it being very different. I like to highlight the things that are different. I like to remind folks of the things that are exactly the same. The meme coin component of the cycle is completely the same. You get your irrational exuberance, things burn out, there is no utility, and people are questioning the concept of money, and people are searching for some sort of economic opportunity to outperform, to get that base layer bag, and they don't really yet understand how to manage capital, which is the topic that we discuss. The more sustainable way to engage with the portfolio. Up on the screen is the dollar. There's three components I want to start with because we're talking about credit. We talk about credit a lot, but we're going to talk about credit again today because very interesting things are playing out, especially heading into the end of the year as commercial real estate gets increasingly more volatile, and we're likely to see some more banks absorbed by the larger banks in the financial system. So the dollar looks relatively good heading into the end of the month. Uh, the market tells the story. I don't care too much for projecting into the future, but this basic presentation here is toppy. The story that's told as of today is what matters. Projection, not so much. It looks toppy. It looks like it wants to roll over. And then you zoom out from a 3 month perspective and especially the 6 month perspective, and it really wants to roll over. We haven't seen a shooting star like this since the 1980s. And this means the world is changing. These are three distinct states of planet Earth and the financial system that it is using. And for this to roll over, it means the structure of the world is changing. And that is interesting. It should be disconcerting to a degree. It shouldn't be surprising. I mean, the dollar has been in a raging bull market since, see it on the chart. It's right there, 2008. It's straight up since 2008, obviously with the cyclicality, but you see the secular trend. It is extremely visible. If the dollar keeps rising, Japan's going to be in trouble. China's already in trouble. And for the party to continue, which means systemic stability, social civility, the dollar needs to roll over. And then that brings up all the topics we talk about in crypto, all the finger pointing, all the criticisms we have of the traditional financial system. And we can have those criticisms, which leads us to ideas, potential observations that allow us to see things early, to foreshadows of systems in the crypto markets that are better. And that gives us our opportunity, that gives us our edge. But don't don't fall into the trap that the traditional financial system is going anywhere. The majority consume it, the majority are in it, the majority are plugged in. It is the matrix. They will defend it. All the wonderful metaphors that we have of the matrix over the years are still applicable and will continue to be applicable. It is going nowhere, which is why you're able to engage with these markets and outperform into the coming years because you are still in the margins. Change starts at the margins, and the changes are starting. It all starts with Bitcoin. Bitcoin, all-time high. Why? Access. And the appreciation begets more appreciation and more realization of the ideas that are in play. And the idea really did start with money. What is money? The reimagination of money. So, money in the traditional financial system isn't what you think it is. Money is this: money is bonds. Bonds are used as money. Dollars are money. Bonds are money. Money is used to print currency. Governments do print currency, but the vast majority of currency on planet Earth is printed by banks. Banks extend credit. Money is used to print currency using credit offered by banks and more recently, private credit, non banks. What you're doing in the crypto space when you're borrowing on a Curve or an Aave is you're printing currency, you're expanding the currency supply. So you're able to understand, hopefully, a little bit of the traditional financial system by inspecting the way you engage with the crypto markets. You learn either forwards or backwards. It doesn't matter. You're going to learn one way or another. So that is a big first step into understanding what you're engaging with in the crypto markets because it'll lead you to understanding how the traditional financial system works. And then, as I said, you're able to see what is innovative, what is actually meaningful. And bear in mind, that is the right curve way to inspect markets. And thus far, there's two prevailing things that have been playing out for appreciation. Certainly left curve with the meme coins, and that's just be first and no instinct and no hesitation. And it works for many persons, and that's cool. And I appreciate engaging with that kind of activity on occasion. That's something I do not resist. But also, we have the mid curve interaction or part of the cycle where it's the repricing. The repricing is the mean regression from the downside, where all the depreciation to the downside catches up. And I'll show you that from a Bitcoin perspective. And you can see that very nicely, not on the 6 month chart, but you see it nicer on the 3 month chart. Mean regression to the downside regresses to the upside. You have divergence from the average price. Um, and that is a very important inspection from a premium versus a discount perspective. Okay, so we're clearly at a premium, and the premium is going to go much higher. And you could have plenty of mean regressions in the interim, but it is quite reasonable, all things considered, from a macro perspective, that we're going to have a great expansion of the currency supply for reasons that we discuss, and we'll probably touch on as always in this stream. And but it's not the top that interests me. It's the next cyclical bottom, and that's something probably around 50 to 60, in my opinion. The next cycle heading into 26, end of 25, 26, that's going to be an interesting one. And we have yet to see how, even speculate how they're going to manage that deflationary impulse. Anywho, so the right curve, we want to inspect what is innovative. And to me, the most innovative thing offered by crypto markets is credit and the reimagination of credit in a more sustainable, iterative way. What is better credit? How do banks turn money into currency? They do it using interest rate arbitrage or a carry trade. They borrow short and lend long, or the vice versa. I'm not going to get into a squabble over my use of terminology, but the point is banks borrow and lend, and they want to get a spread on that interest rate. And right now, there's the inverted yield curves that everyone talks about, and they want to borrow at 2% and lend at 4%. And that's not the case. So banking is very much broken, and I'm not fond of the way banks operate. I don't like traditional financial banking. I am much more fond of not a full reserve. I am interested in fractional reserve, and that's where we get into what's innovative about crypto markets. You need uh, a degree of fractional reserve, you need a degree of credit in the system to grow and expand, but that credit is an inherent risk to the system. Now, banks manage that risk from a regulatory perspective, and it's basically a psyop. It's just all wordplay and terminology, and systemic central banking was introduced to manage that risk. And I'm not fond of that implementation. I am much more fond of what I'm seeing uh, built and created in crypto markets. And thus far, the most impressive innovation is that of CRVUSD. CRVUSD deploys a dynamic monetary policy to manage risk. And the risk predominantly is obviously the relative value of its currency. And its currency is dollar denominated. So as its value drops below the value of $1, the unit of account, the interest rates go up. And now, with the adjustments to governance, they go up very quickly. So that encourages repayment and then that encourages repricing of CRVUSD towards the dollar. So, what is occurring is an adjustment of monetary policy to protect the relative value of currency. The there are very interesting biggest shams in history. And one of the biggest shams is that a Chase dollar is the same as an HSBC dollar, is the same as a Bank of America dollar. And that doesn't make any sense because that dollar has no manifestation, no expression of the respective bank's balance sheet and the relative health of the bank. There's no risk uh, ex- expressed in that dollar's value. And I find that a fascinating realization of how the traditional financial system works. And in crypto markets, we're much more accustomed to that relative valuation of these banking dollars, a CRV or USD compared to a DAI, compared to USDC, compared to USDT. And we've seen significant volatility. And that's the way that is really what's occurring in traditional banking. A Chase dollar versus a Bank of America dollar, except the risk is just hidden. It's obfuscated, it's not expressed, it's backstopped. FDIC and reserves, and how the banks use the reserves for their intrabank money. And it's just, I don't think that that's reasonable. You want to see the risk, and that risk is expressed in interest rates. And that is what is so profoundly distinct in crypto markets is these interest rate policies. And there's innovations like redemption models, and that is meaningful. And Liquidity is having trouble, and Aave, there's redemptions, and Abracadabra, there's redemptions, and there's been complexity. So I'm not too fond of the redemption model, but it does at least iterate because it's deterministic. You reach a threshold, you liquidate, and that's meaningful. And that's why CRVUSD is innovative even on top of the redemption model. It's a soft liquidation. You're liquidating, 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 liquidating. So it gives a person a capacity to manage their risk exposure expressed via the interest rate. Um, and obviously, there's an end threshold where there is liquidation on CRVUSD, but it's an innovation. And oh my God, at least innovate. The traditional banking system doesn't do fucking shit. All they do is hide the risk. All they do is just mask it and don't show it to people until a damn bank blows up. That's the most ridiculous system to be observed. I mean, that's real and that's what it is. And that's why these crypto markets are so damn interesting because the risk is expressed. And the volatility we see in the price point is not obfuscated. But then again, as we said at the start of this particular segment, this is the right curve inspection of these crypto markets. Mid curve was repricing, where things start to get appreciated from a money perspective. And I define Bitcoin and Ethereum as a money, not a currency. And we talked about the left curve. So we're on the other side of the spectrum right now talking about credit. So the biggest thing in the planet is credit. Credit produces the currency we use on a daily basis. And I think this is what's building a new financial system. And in many regards, this is expressing a great deal of Bitcoin maximalist interest. It's just that a lot of the conversation of maximalists come up short of understanding how financial systems really need to operate, and what is needed for them to function. And that's okay for the maximalist conversation from a money perspective. But you don't settle in money, you settle in currency, because a good money you don't want to spend. And that's exactly what they're saying. And I'm saying that I agree with that. And I'm just extending the narrative a little bit further. A good money you don't want to spend. A good money you want to use to create currency. And the currency, it should be equally spendable and savable. It should have relatively little variance in value, which produces a great deal of complexity from a consumer price inflation perspective. Supply and demand perspective of the currency versus the availability of goods and services. And that's why you need a currency that is adaptive or responsive to availability of goods and services. And you can't do that with the money. You want to protect the money. The money needs to be deterministic and immutable. And that's very much exactly what Bitcoin is talking about. So Bitcoin is certainly a better money. And frankly, Ethereum's a better money than the dollar. And there's a lot of better monies than the dollar. That doesn't mean the dollar is going anywhere for a long, long time. So best respect the cyclicality of the cash position. That a lot of people have dollars, a lot of people have Bitcoin, but that shit is going to get really volatile heading into the end of 2025 and 2026. So respect that from an FX perspective. Okay, Bitcoin's a better money. Great. Can't fix the world with money. That's only part of the equation. And that is my strongest argument. You need to fix credit. You have no growth in a society without credit, without a capacity to do something, to borrow, where you could do something that you couldn't do because you didn't have an adequate supply of currency. Isn't that obvious? That's where a loan and you could start a business, build a manufacturing plant, and do things that you couldn't do, and there's risk built into that credit. It's a good idea. If the good idea works, great. If the good idea turns out to be a bad idea, okay, that risk is now seeing why it was a risk. So that's what I love about these crypto markets, the expression of credit in an innovative way. That certainly is going to bite a lot of people, and it's going to serve a lot of people well. It's going to bite a lot of people because they look at these markets from a left curve perspective and they see the opportunity or the hope for achieving some sort of financial outperformance. So you're not turning $100 into $1 million on Bitcoin, and you're not going to do it on a fair amount of right curve altcoins also. But that's something that needs to be digested, but, and is important to digest from an investment versus cash perspective. So cash is a combination of money and currency as I define it. A lot of these things are my definitions. So clearly, I advocate for Bitcoin and Ethereum, Solana to be used as a cash position. And frankly, all gas tokens are compatible with that definition as a cash position because you could have Bitcoin, Ethereum, Solana, Atom, uh, what have you, on a respective chain and use it to purchase other items because other items are denominated accordingly, respectively to those units of account. Um, so cash and investments. Investments produce more cash. Now, Outperformance or underperformance? I will certainly underperform a lot of left curve interaction with these markets, 10,000, 100,000% on meme coins. But I need to right curve the market. I need to have this rich, complicated, sophisticated perspective on these markets because one, it's sustainable. Two, it's rational. It makes sense. And that allows me to be consistent. So cash position and investments. Investments produce more cash. Investments are not to be thought about as cash. Investments are not to be necessarily liquidated. And optimally, there's a great deal of investments in the crypto space that are not liquidatable. So that is perfectly consistent with this framework. This is way to engage with crypto markets in a sustainable way. Curve happens to be a great investment. Speculatively, the VE33 forks, the solidly forks, are turning out to be a very interesting investment. Aerodrome is going absolutely wild from a market cap perspective. Velodrome is not too far behind. So the Velo team, coming hot off the heels of the original solidly release, has done quite well on our optimism. I think it's certainly something I don't chase. I, uh, I'm not interested in the optimism ecosystem because it's lagging from a currency supply perspective. And you know what's lagging optimism from a currency supply perspective? Base. You know it's outperforming base. Why? Not because of fundamental reasons. The most important fundamental reason, currency supply. It's outperforming because of Coinbase integration and headlines and narrative and exuberance. So the left curve, the meme coin exuberance bleeds over. And as the cycle progresses, you're going to see all that exuberance bleed over into everything. It bleeds over into everything. So at some point, you need to rotate from the left curve to the right curve, not just to be sustainable, because the exuberance just bleeds over and the meme coins fizzle at some point. They fizzle when Saturday Night Live happens and Elon Musk goes on and Dogecoin rolls over for the cycle. So it's not sustainable. At some point, you got to rotate. As for V33, which is a hot topic, and my interest is Arbitrum. In that regard, it's Ramses. I'm interested in what Solidly does. The original, it's not the original Solidly, but it's the recent manifestation. But it's not working. Just being honest there, it's just not working. The fees, the structure, very interesting tech innovations. I'm very interested in the cross chain that they've implemented. It's big tech, but it is what it is. And you got to be honest with what the market is saying about a product. And when the most important thing is to pivot, I think a pivot is warranted in many regards. Just got to be honest about things. What am I very interested in? Ra on Fractal. I would like a healthily sized position in Ra on Fractal. So Fractal is obviously brand new launch, basically just meme coins. Uh, RWA had a nice start. Eve got the volatility, 57% on the daily. Where's KFC? KFC, 50% is volatile. But the meme coins is something I don't participate in a lot, but I want to capitalize on the transaction volume, on the fees, and I want to capitalize on credit. So you don't really have much credit availability. It's brand new, the network. But the first thing you're going to be able to capitalize from a transaction fee perspective is a RA, and RA is V33. Ramsey's team deploying on Fractal. So very, very interested in what and RA coming online, and I want a sizable RA position. I got FXS ETH already on Frax, so I'm very much prepared for that. That's something for me, in my opinion, with regard to Frax and the Fraxel ecosystem and what it could potentially become. The second it launches, do have to inspect for 5 seconds the climate and where things are. Market cap. There's a launch at 100 mil market cap. Got to inspect the LP and available supply and If you because if it's Lawrence has a 100 mil market cap and yields on LPs are at 10,000, 100,000% with a fair amount of liquidity depth, you're going to see price point roll over probably. So my goal is to get a sizable position and a reasonable percent ownership of the protocol. My general goal for percent ownership of protocols on large market caps is 0.1%. Optimally, the higher the percent ownership you have, the better. If you get 1% of a protocol, okay, great. So the higher the better, but that helps in the position size calculation. Can you get an appropriate position size? You don't want to undersize your positions, and that gets complicated from portfolio size perspective. Smaller the portfolio needs to be much more concentrated, and you can diversify less. But 1% of the protocol is crazy. That's a big deal. 2.5% and less, 0.1% to 2.5%. That's a crazy range, but that's very interesting territory. And a million, two, three, four, $5 million market cap stuff, you could get decent percent ownership of a protocol, and that's it's quite interesting. And that's from an investment perspective. Uh, folks could be critical of my behavior in markets where I don't think in terms of appreciation. You get $1 million market cap asset and it goes to 100 mil and it crashes to 50 mil. It's like, oh, it didn't capitalize on, it's down 50%. It's not sustainable. Investments produce cash. Cash varies in denomination. Respect the macro cycle. Understand dollars and understand how it will play. Bitcoin will crash against the dollar in the coming years, and then it will go much, much higher. Respect the cycle, respect yourself, and respect the portfolio. So, who's in the house? Tapsy's in the house. What's up? Good morning, Adam. Raul. Why is BTC not an investment? I'm having trouble explaining this to people, to each their own. It's my definition. It helps me compartmentalize the portfolio. Investments, cash. I think of Bitcoin as a cash. You can, if you want, define Bitcoin as an investment, but now you need to study Forex trading, foreign exchange, which I define it in those terms. I define Bitcoin, US dollar, euro, yen, pound. You have to be cyclical with those things. Conceptually, it gets blurry because Bitcoin is more akin to a money. Dollars are not money. Bonds are money. That's why the conversation over the years is that cryptocurrencies have attributes of money, of currency, of equities. So you have to be granular and specific with these definitions. And in many regards, they're going to be subjective definitions. This is how I define it, and it helps me put a framework on what we do and why we do it. It's been a weekly listen dating back to 2021, Prince. Discounts and premium talk is mid curve, left curve, Bitcoin good, right curve. Larry is showing my bags, the global elite, mid curve. I need a discount. Okay. Generally, there's going to be a story and a narrative associated with all parts of the curve. Want to avoid the mid curve. You can capitalize from a left curve perspective, and this is my subjective opinion. Capitalize a little bit. It's just exuberance, though, and you really, I don't feel good about taking money from other people, so I don't like capital gains trading. I like my methodology from a right curve perspective, and it's not going to outperform. What does that mean? If I get a 10x on the portfolio, the next macro higher or low, I'm satisfied. So you have to take that into account. I'm not going to turn, $1,000 into $50 million. That's not my goal. That's not my objective. The objective is much more reasonable. $1 million to 10 million to 20 million. Well, who's chasing 100 million? Turn $1 million into 500 mil. I think this comes into the expectations conversation. What are your expectations? And be granular with your definitions, Prince. It's been a hell of a conversation since 2021, and obviously we are much more specific nowadays. We talk about and are respectful of portfolio size, uh, position size, considering portfolio size, and then now we compartmentalize much more precisely, much more critical with our terminologies, much more consistent as well. In fact, when we started this stream, I don't think we were very consistent at all. Uh, it's a it's an interesting reality, and that's the whole point. The whole point is to get better over time, to have a more consistent story over time, a more rich and robust and rational story over time. Butterfly looking good for breakout seems to be printing income as well. Yeah, butterfly is a big deal. There's a lot of big deals, and this is the excessive diversification conversation. Can't own everything. You don't need to own everything. Butterfly has an incredible treasury. Golem has an incredible treasury. Gnosis has an incredible treasury. There's a lot of incredible treasuries. I mean, look what MakerDAO has. And then total deposits and deposits versus market cap is an interesting inspection. There's going to be a lot of great things. And 30%, look, 30% is what it takes, in my opinion, to garner investment. 20, 30%, those are interesting numbers. 30% is a 3 and change year ROI. And this is a tweet I said yesterday while on the beach, talking in terms of real estate. 5% APR really sucks from an ROI perspective. The world's going to be a different place in 20 years, and 5% APR is a 20-year ROI. Fuck no. 20%? 5-year ROI. Okay, it's palatable. Higher than 20%. You In a world where banking infrastructure is starting to really lack a capacity to extend credit, we've seen an explosion of private credit. So it means much more to be able to give someone capital as an investment. You want a damn good terms on an ROI. 20, 30%. Pay me. What's my pinned tweet? Fuck you, pay me. Pay me. If I'm going to invest in some shit, I better get paid. So then comes like the XYZ calculation. How much does it cost? How much is it paying? And how likely is it to continue paying into the future? And that's a great simplistic way to express to someone, to anyone, what it means to be a good potential investment. Hope that helps. Good day to you, Cab. Do you ever find yourself tempted to LP Arbitrum Ramses with high APY pools? Yeah. Um, the second you deploy any reasonable quantity of capital to a high APY pool, it dilutes really quick. If you double the liquidity depth in an LP, you're going to have the APR really quick. And if you're talking about the concentrated LPs, you get out of range, and all of a sudden you have to manage liquidity. You're going to have to pull the LP and redeposit. Yes, I get tempted. I'm interested. I don't have the capital. In my opinion, from an LP perspective, you need excessive capital. Uh, you know, throw 100 grand around in a wide LP, so, something that's cranking out 5K APR in a in a concentrated LP, and it's like 250, 300% in a wide band LP. Great. You're throwing around 6, 7, 8 figures. Those are very interesting numbers. Very interesting numbers. And you don't give a shit about the band, the ticks getting outside of your concentration range. And that becomes an interesting component of the portfolio. Uh, a complexity there is that portfolio size. Too small a portfolio is you're going to have opportunity cost associated with an LP. You'd be surprised. Small portfolio and 1,000% APR. There's a lot of opportunity cost associated with that. 1,000 APR sounds crazy, but not at smaller numbers. You need big numbers, and then it becomes really interesting. And the much better to start understanding construction of the portfolio and you're going to have to cycle with the smaller the portfolio. You're going to have to play um, investments more as cash and rotate out of gas tokens, rotate out of monies, whatever. I'm just going off on a tangent. So yes and no, Adam. I restrain myself effectively nowadays. A side note, earlier today, a few of us found ourselves finding out the hard way why you're not a big fan of redemption models in Prisma. Low interest rates made less interesting by poor utilization. Um, so, okay, you see, it's a derivative of liquidity. I'm not a fan of redemption models. Uh, it's got to protect the infrastructure. But the problem is, if you protect the infrastructure too much, the infrastructure is going to get arbitraged, and people are going to be more interested in other infrastructure. So if you get, and this is literally what's happening with the financial system right now. That's what happens with the SEC, and you have regulatory arbitrage. It's a big deal. And you need to think about what you just observed with a couple of crypto protocols in terms of traditional finance, and realize how the whole system works and how psychology works, and the market ultimately tells the story of what is a better product. And frankly, as this is crazy. If there's this much deposits considering these interest rates, tells you something. There's almost no risk of hard liquidation, especially if it's a conservative credit position, and the market is appreciating that, and they're paying a significant premium for that. And these numbers aren't as big as it seems, because this is an APR from a yearly perspective. And a lot of these types of positions are highly cyclical because the assets volatility, Ethereum, Bitcoin, here are cyclical, and people are longing and shorting, and you have to prorate the APR, 40% a year on a three days, in a week. What's the APR versus you're paying 7% for a week worth of credit, and Bitcoin rips 20%, 50%, and you leveraged it and you looped it, and it was on chain. Okay, so you could see how the risk psychology gets executed, and it's pretty interesting. And I think this garners a lot of attention going forward. It's going to take time for it cyclically to increase in depth, but that's not my concern. That's my interest. It's protecting the infrastructure while also offering a pretty incredible credit arbitrage destination. So that just further solidifies everything I'm expecting for my investment. I'll check back in 8 years. I got no problem. It's productive between now and then, and the destination in 8 years makes me smile. Captain Rational forgot the sunblock yesterday. My wife is chuckling right now. My man. Oh, yeah. Yes, I did. Not sure if you brought this up as I'm late to join, but are you concerned about MKUSD depegging as of late? Okay. You've heard me talk in Discord since launch. My man, Arrow. Of course, I'm concerned. I don't like the redemption model. I'm not, there's a lot of vested interest, and there's a lot of actors that are invested that are going to take action and protect. And as of late, I didn't like the tech. I was curious because they were taking all the collateral, and it was an interesting destination for capital. I was concerned about who the vested parties were, who was lending, and big Justin Sun throwing in a couple $100 million. So there could be a lot of credit being paid back under certain circumstances, and he had a lot of control and a lot of power. There's a lot of risk, and I don't like redemption models. Um, I think that is as clear as I can be. So sure, at some point, it's gonna have peg burden. we'll see how quick the Dow is to respond. But look, the Dow has to respond with interest rate policy. I'm sure that's probably better than the Fed board, the FOMC, and they adjust interest rates every quarter or whatever the hell the FOMC cycle is, because the Dow could respond proactively. So that's better than that. At least it's iterative than traditional finance and what we have as central bank from a policymaker standpoint. But what we're looking at on the screen right now, there's no Dow to adjust this interest rate. The interest rate adjusts to defend itself in real time. The high interest rates will force the purchase of CRVUSD to repay debt. That will put upward price action on CRVUSD. The protocol is self-healing. That is the craziest technological innovation from a currency standpoint, from a credit standpoint. There's nothing like this. And the hardest thing for folks to see in an exuberant market with the thousands of percent on meme coins is the lack of volatility and price point, because they don't people don't peer through the bullshit. They don't see through the price action, and that is what it is, and that's okay. I don't give a shit if Curve ends this cycle at $2. That doesn't mean anything. What matters is the revenue and the utilization and the consumption as an investment. That's all that matters. The price appreciation means nothing because everyone's looking at turning $1,000 into $100,000. Yeah, you're going to need to have something go serious multiples on the money, so you buy it and sell it at the high price point. It's called capital gains. This is not that. This is not a tradable asset in that regard, albeit a lot of folks are going to love a 10x on this thing at some point. It would be strange to not see that kind of number on irrational exuberance. Things could get real. I expect things to get really weird. That would be really weird for them not to get really weird at some point. Things are not weird yet. We haven't seen weirdness in meme coins. This is just the start of how weird it gets, because at minimum it's going to get just as weird as last cycle and the cycle before. 16-17 was weird, and 2021 was weirder. It's going to get weirder. So it's going to get really weird because now there's actual investments. There was no investments in 2021, and there was certainly nothing that was investment grade in 16 and 17. Now there's actual businesses that we talk about in terms of actual real world financial products and services. So this is a hard chart to inspect. Oh, it's underperforming. Okay, great. It's not a goddamn cash position, and it's not something that's tradable. But this is, you know how much cash that is? So my entire portfolio is cash flow, and I have 2 years plus of cash flow data, which is a chart. It's a chart, just like any chart, just like any charts. Can I pull up a chart? Look, it's any chart. I have a cash flow chart. Do you know what kind of cash flow this is going to generate? This is crazy. And now the cash flow is the cash. Notice I'm saying cash. You have investments and you have cash. And that's how you manage capital. Investments produce cash, and you could choose to do what you want with cash. Do you need to service debt? Do you need to pay a bill? Or do you want to change the denomination because maybe a cash is outperforming? What's a great cash? Oh, so happens that Bitcoin and Ethereum are very interesting cashes nowadays. Interesting cashes. I'm a phraseologist. Shit. um, Makes sense. Do you regret farming and locking up your Prisma? No, it's fine. I don't mind underperforming. The biggest reason I don't mind underperforming is because it's contrarian. Everyone is so psychologically programmed that if you don't make as much money as possible, you're doing it wrong. And that, to me, says I need to turn that concept or that psychological reality on its head. I don't need to make as much money as possible. What I want to do is be right. And which also means I'm the most right curve motherfucker there is. I need to be right. I need to be right for me. I don't need to be right to make as much money as possible. That will be confirmation of me being right if I do well. I have no interest. My expectation is not to be excessively wealthy. I just want to be free. I just want to click a claim button on a beach. And I want to do these streams. I want to talk to you guys on a daily basis and not have to worry about doing work that I don't want to do because this isn't work. This is fun. I'm helping people. I want to be an educator and I want to have these kinds of conversations. And I think that this is the direction things are going to head. I very much look forward to the future. It's going to be very fun. Cap, when's the bottom? uh, well, we're way past bottom. I was talking to someone in a sauna the other day, and they were like, "What do I do about crypto?" I'm like, dude, you're late. You're late. Late from a meme coin perspective. Not so late from an investment perspective and curve, interestingly enough, but nobody's going to fucking process that. Take an 8 hour conversation to express that idea, or 2.5, 3 years worth of streams to express that idea. Investments versus cash. Jeez. So way past bottom. We're at the mid curve level of the crypto market, in my opinion. It starts at bottom, and then you have left curve season, and then mid curve is basically the repricing and everything coming back to the average, and that's where we are. And you can see that in this chart with an average price, time-weighted average price, 3 months on the Bitcoin. That's mid curve. So 35,000. So we're at a big premium. So we're starting to head into right curve season where this thing's going to continue to appreciate. Cash is going to be appreciating very nicely. Solid 150. You can start seeing this thing at 3, 4, 5, 6, 7, 8. And the projections from like Van Eck and folks. It's gonna be very interesting and very weird. And then all that shit bleeds over. It bleeds over, and the right curve altcoins make multiples. And people start to realize, oh, this is really financial infrastructure and really interesting financial products and services. Um, can I do the calculation on how much curve you need to max lock for 5,000 a month in income? Well, APR. So here, the it's going to be really interesting where base cash flow fees start to potentially overcome vote rentals. But vote rentals are big cash flow. So it all depends on position size. A smaller position size, you could get 54% on your money. But I can't vote on this. I can't vote on that. I can't vote on any of these. I literally have to go all the way down to MIM, and that's a whole interesting thing. And that's why Abracadabra is well, we'll see what happens with Prisma. They need to up their vote rentals. This is the only mechanism I see for potentially protecting a redemption model. This is the hard method, and this is called you're paying. You are paying to incentivize arbitrage to protect your damn product. And this is what's needed from a redemption model perspective, in my opinion. And I think Abracadabra is has been doing it for years, and they're going to just continue to do it. So this is the little payer that could, and I think they're going to keep paying. This is pretty much the only thing I could vote for. I could vote down here. I need like 50,000 plus uh, rentals to vote, but you could get if you have you're looking for 5K in a month income. I was getting close, so there'd be about 4K if you 360. You need a couple 100,000. So think in terms of APR. If you could get 25, 30% on your money, With 5K a month is 50, 60K a year. 60K is 30% of what? Do the calculation. I'm live streaming here. 60K is 30% of what? So the 30% I think is a reasonable number. This comes back to the 20 to 30% as something that's reasonable for an investment grade product, and that's what these are cranking out. 20 to 30%. I think base V curve is going to produce some interesting numbers. See, the thing from my mentality, the reason I am exposed to products like wrappers, wrapped LSDs, which produce much more, 85, y- the whole peg and the whole, yeah, that's not really a big deal. But that's a cash position. That's a component of cash because you can sell it. If you can sell it at some point, you need to sell it. And I don't want to do that. Understand that. And that will cause losses, capital losses during the bear cycle. But because I don't have to sell, that's freedom. And that's what an investment is. You stand by something. It fits into a framework. So no, I don't want to do a transaction. And it's not showing me the APRs, but I'm pretty sure it's above the 25, 30%. Big numbers. Yeah, there you go. All right, so that's investment grade, 20, 30%. I would take the stables. It's interesting. It increases the complexity of portfolio management. And I just want the antithesis of complexity. I want the simplest regime. And that's what Buffett talked about. And he probably got more complicated as he got older and Munger got into the equation. But for me, investments produce cash. Cash, you trade according to FX cycles, foreign exchange cycles, and you accumulate a war chest. And when investments are at a discount, you acquire more investment, more property, more income rights. And that's the simplest methodology I've seen. And that's what Warren Buffett did to get to where he is. I'm not going to get nowhere near that. I don't care. It's not my expectation. It's like 0% chance of being my expectation. And that's okay. I just need to be okay. I don't need to do some crazy shit. And that's what makes the captain the captain. Have you mapped out any retest levels of Bitcoin giving how high we've run? Of course. Everything mean regresses. We're at 72,000. If Bitcoin crashes to 38,000, the chart looks great. Process the premium that we're at. It's a crazy premium. It's not a big premium. Technical structure would indicate that'd be a hell of a retest. You see what I'm saying there? That's literally breakout, didn't have a retest, and then you print the higher high. Let's get the pen. Retest, higher high. That's the trifecta of bullish confluence. Bitcoin is just going crazy right now, and that's cool. It's Bitcoin. It's understandable considering Gen Pop now has access to it from the ETFs. This chart looks fine. Crash to 35. Okay. All right. So you may want to adjust from an FX perspective your cash portfolio, cash component of your portfolio. But I don't see that occurring. And obviously during the bear market we touched much more on macro than we do nowadays. But bond volatility looks pretty decent right now. And obviously I'm just looking at percentage numbers. There's plenty of reason for extreme volatility, but move has is finally gotten down to 100. And look where we are from a 3 month perspective. We're at the time weighted average price. This is the volatility indicator. Volatility is everything with regard to understanding money and currency. This is a great simplistic way to understand where we are from, oh, I got Bitcoin and I don't need dollars because cash is trash, to, oh my God, get me out of Bitcoin. Am I going to be the last person holding it? I got to sell it before I can't sell it for anything and no money is left. This is a great simplistic way to look at that expression. This is a forward-looking indicator. You see this roll over. This keeps going down. You see this lower than 100? And 2025 is more likely than not to be very, very interesting. 90, and it's going to get it exciting, especially as you get into if you see this at 90, 80, 70, and you see it, maybe you see a lower low. Jesus Christ, you see a lower low on this combined with Q3, and they're already printed 8 trill out of Treasury because they got to print 10.8 trill this year. Oh my God, oh, it's going to get really weird. So sure, you could inspect the bond market. What you want to see is, well, I don't know, could be interesting. It could be weird from a, do you want to see cheaper bond prices or the higher rates? Because higher rates create all sorts of distortions as compared to the status quo for the 2010s being zero rates. So these distortions are starting to finally take effect. Higher lows and higher highs on interest rates are going to cause all sorts of behavior that are going to seem weird compared to the capital gains insanity we've seen since 2008, basically. Um, you want to see the DXY roll over as well. This will be a much more real-time indicator. So this will probably, because this is a pure manifestation of geopolitical arbitrage, geopolitical collusion. This needs to roll over for Japan and China to survive from an economic perspective. I mean, they're not going to survive from a demographic perspective in any case. Peter Zeihan talks all too well about that. But from an economic perspective, literally in the short term, this needs to roll over. Japan's literally talking about ending yield curve control. For them to do that, this needs to roll the fuck over. Not just roll over, roll TF over. Otherwise, they're not going to be exiting yield curve control, and then that's where they are. They were up at 150, but look at it come down. But that's not really down, is it? When you zoom out onto the high time frame charts. So structurally, we're not at bottom in the currency cycle. Crypto markets peer through the bullshit. Crypto markets have repriced, sniffing out what's coming. What's coming hasn't come yet. It's not here yet. Dollar hasn't rolled over, and that is needed for Japan and China to continue to have a financial system, which brings up the whole potential conversation of geopolitical conflict. And that's why the DXY is a pure manifestation of geopolitical collusion. And do they want, systemic instability? They use the dollar as a weapon against Russia, so that's why. And so these are why these charts are so meaningful. Pure manifestation of geopolitical collusion here. Move is pure capacity of the global financial system to turn money into currency, money being US treasuries, long duration US debt, currency being US dollars. And we're talking from a global perspective, and that's not changing anytime soon. So you don't really need to inspect the bond market granularly, but you can. You can see all interesting distortions, and that's why they look at the yield curve and the inversion of it. But from a high level perspective, dollar down, move down as forward-looking indicators of shit getting weird. And by weird meaning crypto markets going up, 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 and then going higher than you thought possible. If you guys remember at the end of 2021, there was some tweets, and I wish I was better at searching for my old tweets. It's going to go lower, and then it's going to go lower, and then it's going to keep going lower until it gets uncomfortable. And that's what it was for a lot of folks that are not prepared for Bitcoin to get to 16K. And now it's up over 400% from bottom. So if it's up 400%, 5x from here is pretty weird. Why? That means it's 20%. 5x from here means Bitcoin ripped the 20%er. It's still diminishing returns compared to last cycle. Was it 3,000 to 60? All right. That's 20x, not 20%, 20x. So last cycle was 20x. So frankly, if Bitcoin goes 5x from here, 350k, 350k, that'd be not diminishing returns. So I think that'd be weird. I don't think we're getting that far. I expect the diminishing returns to continue because it takes more money to move the price, and just give it time. This could be very interesting. Very, very interesting. Anywho, we'll wrap it up in a couple minutes, but I urge you guys throw some questions, talk about anything on your mind. I know you can't type on from an X perspective, but if you're on YouTube, you could surely type in the comments. So if you have any last minute thoughts, get it in, or I'll wrap it up in a couple minutes. Let's see anything else on the chart that's interesting. Dimension back above 7. How's that for a candle, ladies and gentlemen, from a 3 month perspective? Hasn't been live for 3 months. Weekly perspective, daily. Yeah, you probably want to inspect from a daily perspective. Okay. So it's a lot of seed investors that needed to cycle out, need a cost basis reset. And at some point, I expect it to continue. Dimension is a very heavy burner. Its roll-ups are going to disrupt supply significantly. And at some point, sellers will be exhausted and buyers will continue. It's got a hell of a degenerate narrative, but it's also pretty interesting technology. So you can have your left curve and right curve perspective equally on this product. Um, with regard to discount versus premium, I don't have any insight. There's no history, meaning you don't know where the bottom is, the cyclical bottom in end of 2025, heading into 2026. You don't know where cyclical bottom is. You don't even have a sense of it. My perspective is biased because of the airdrop, and that's understandable. And that's why so many Bitcoin maximalists are so biased. If you are mining Bitcoin at $10 and buying Bitcoin between $10 and $200, you're going to have such a horrible bias. It's very hard to get past historic biases. So I like this product, and I look forward to it to continue to be productive. It goes 10x on the money and is producing 10% APR. That's crazy. And that's my base case heading into 2030. I expect the entire portfolio to go 50x on the money, producing 20 to 30% APR. And even if it's 10% APR, you get a 50x portfolio and you're producing you're producing 10% APR. You're done. It's crazy. It's crazy. Takes 2-3 cycles to make it in crypto. Always remember that. Takes 2-3 cycles. Takes 8 to 12 years. And if you could do it in 4 to 8, that's rare. Very rare. 8 to 12 years though to really make something of yourself in the crypto markets. Um, Avalanche had a nice repricing to the upside. Wow, look at that from a daily perspective. Very interesting positioning. Where's the line? Need a horizontal line. Right about there. Holy shit. So I was looking over here. That is spot on. This is straight up Bitcoin situation where they were selling at previous all-time highs. Very, just not even close to all-time highs, previous local highs. Very interesting though. Where we at with market cap for AVAX? Oh, this is a gas token, so it's part of the cash position if desired. 275 mil market cap. AVAX has big narrative. Avalanche, Phantom, big stuff. I mean, literally, Ethereum mainnet's going through an upgrade in a couple of days, 2 days. Oh my God. Nobody's even talking about this shit. Arbitrum's going to get crazy when the fees are a penny again. Arbitrum's going to get crazy with transaction fees. Arbitrum is where I want to be because it has more dollar liquidity depth as compared to optimism. Simple as that. Doesn't diminish the technological significance of optimism and therefore downstream optimistic chains, base, and downstream however many children come into play. I expect many, many more over the next decade. But optimism, Arbitrum is where I want to be. That's my right curve inspection of where the most activity will be, and I've achieved that particular exposure vis-a-vis Ramses. So I don't mind it underperforming Arrow. I don't mind it underperforming Velodrome. What I mind is that I made a choice based on a rational inspection. And that inspection comes from DeFi Llama. If you folks don't know, you go down to the stablecoin perspective and you want to see Solana at 2.4. Damn, 7% positive sum environment. Arbitrum at 2.5, 6%, 6% positive sum environment. First off, 6% positive sum is a cross-border capital flow. That's an exogenous inflow of capital. There's no way you have a 6% change of capital from endogenous credit. The credit isn't there on Arbitrum as compared to mainnet. The mainnet liquidity depth could facilitate much more credit and endogenous currency expansion. So this is very interesting. You go over to optimism, you have less than a bill. Positive sum environment, so there's going to be a fair amount of exuberance and outperformance. That's great. Avalanche and Polygon are nipping at the heels of Arbitrum and Solana, and Binance Smart Chain. The best expression of Binance Smart Chain activity is Theta. I mean, it's just outperforming. That from a price point perspective and a potential investment perspective, Theta would have been nice, but I just don't like Binance Smart Chain. But look, that's a perfect example of a bias potentially getting in the way of a good investment. Is what it is. This thing has rallied very well. But that's okay. I also need to know I can't own anything, so I use the fact that it's Binance Smart Chain to invalidate just excessively owning things that I don't need to own. Hope that helps. I appreciate the difference between comfort and performance. I'm not quite there yet at that level. I appreciate that, respect that, and I understand that. That's your goal. Your goal is to find that level, seek that level, attain that level, realize that level. That's why we're here. We're here for peace of mind and freedom. And that's not to make more money. That's to make enough money. So I've heard phrases over the years, and it was a good one in Wall Street. Money never sleeps. When Josh Brolin said, uh, there was a conversation, and he was asked, "What's your number? What's the number when you're done and you can walk away?" And he said, "More." Nope, not the captain. Not more. I don't want more. Just remember that, and hopefully that will help folks actually achieve peace of mind. Because more is there's no goal, there's no end to more. You want you want attainable goals. Hey Cap, when you talk about cash flow, I understand how you can lock up funds permanently like you've done, but for us who can't do that, are there options just staking an LP? I talked briefly about it earlier. Smaller the portfolio is not really going to capitalize effectively from an LP perspective. Um, Now, here's the thing. I know that because I've done that, and I've not capitalized effectively with small positions. I'm like, oh, 5,000% APR. It's opportunity cost, and it's not going to achieve what you're looking to achieve. You can't necessarily pursue cash flow depending on the size of the portfolio. Smaller portfolios, unfortunately, do need to engage in capital gains. You need to achieve a critical threshold of capital where investments become reasonably sized. Investments are governed by XYZ. How much does it cost? How much is it paying? And is it likely to continue paying? If you cannot calculate a reasonable investment using that equation, it's not a reasonable investment, which means the position size is incorrect potentially, or most likely. So now that puts the question back into how to make enough capital so you can invest, considering and being respectful of a required position size. So you have to define all of these things. You have to define what your expectation is with regard to cash flow. You have to, then that is going to contribute to uh, required position size to achieve required cash flow, so on and so forth. And the smaller the portfolio needs to engage in psychological warfare, left curve the shit out of the system. Uh, and that's if you make money here. So I think it's very reasonable uh, to save. The problem is save from work and dollar cost average, and you'll be fine in 2027, 2028, and you'll be much better off in 2031, 2032. And it takes these types of years to do well. This is not the channel for get rich quick. This is the channel for the reimagination and the rebirth of investing, and and the return of things that the market lost. And it's what's most interesting about talking like this is we're talking about the crypto markets because you can't do this in the equity markets. It doesn't work. Doesn't fucking work. And I did it for a long time, and it doesn't work. You're not going to get anywhere remotely reasonable. There is no interesting goddamn investments in the equity markets because you can't do the things that you do in the equity markets. You can't own a bank. You can't extend credit. You can't do these things. And there's too much risk from the boards. There's too many people involved in the equation, too much human resources, too much capex, opex. There's too much bloat and burden, and they suck the money out of your pockets before it gives you a goddamn dividend. There's too much risk. Dividend yields on equity markets are literally the scraps, the leftovers, the appeasement from the board to how much they can give you to keep the investors happy. It's the leftovers. You know what's not the leftovers? The bonuses. And that's required because you need human resources. So the future is filled with businesses of financial products and services that get rid of the humans. And that makes a great deal of sense. And this is exactly what Uber did. This is exactly what AI is going to facilitate. Is getting the human out of the equation for businesses that don't need it. It's going to disrupt finance. And that's what everyone's talking about. Make better financial system. That's what I'm talking about. And that means a lot of things structurally from a societal perspective. And that's an interesting conversation. And that's the whole AI conversation. What are people going to do? They're not going to fucking stock shelves. They're going to need to have a skill. Oh, horrible. Oh, that's so horrible. It's like, what has humanity done to help people get skills? Oh, there happens to be an education system. Oh, it just so happens that the education system has changed where you can now go on YouTube and pretty much learn anything you want to learn. So you have to figure out what society needs. And if you learn a skill that people are paying for, they'll pay you. I mean, the equation is really simple. And bear in mind, I'm talking from a hindsight perspective because I went to school for electrical engineering and society was not really paying for it. So in 2008 and 2009, I taught myself how to program Android, and I still program Android, and society still pays for it, and it pays much more than electrical engineering. So anyway, I'm going off on a tangent because I think a lot from my children's perspective. What kind of education do they need? What kind of skills will society need heading into the future? And these are very important conversations to introspect on, to talk with yourself about. Frankly, that's what I'm literally doing right now. And this entire stream is a monologue. So I'm talking to myself, and you guys are literally listening to me talk to myself. So that's kind of weird. but thank you. CTR still seems underpriced. Of course, it's a right curve play. So things could be mispriced for a long time. And, look, you know what's doing interesting? Check this out. Just coins up 26%. You know what's interesting? Zoom out to the 3-month chart because this shit dates back to 2026, not 2016. That is a large ascending triangle. You will be wrong longer than you will feel comfortable with. I've had this thing for 8 years. I had no idea what it would be. This was part of Masternode season. Now, a lot of you will be too young to know Masternode season back in 16 and 17, but everyone was spinning up nodes, compiling daemons, and that was ICO season and Masternode season. And they were playing around with blockchains. And this is one of the only things to survive from those days. And Golem is another one, and there's a couple of others. Firo's still there, and there's plenty. The UTXO chains aren't going anywhere. So this is a big survivor, and it's up big. It's up big. 8 cents to 34 cents this cycle. I was didn't have any capital in crypto markets back then, so this was like $1,000 or like a penny or so back in 16, somewhere in there, somewhere in 16. And then look, sometimes you will be wrong longer and you may not be proven right. So this is a great thing with regard to underpriced, overpriced time. This is why it takes 2, 3 cycles to really get anywhere. But this is the heart, in my opinion, of EVM on Bitcoin. That means literally curve on Bitcoin. That means pick your favorite protocol, whatever. This system, Rolux, runs everything on Bitcoin. It runs Aave and Bitcoin. Everything that you do in the crypto space, you can run it on Bitcoin using this system. And it's finally becoming something significant, in my opinion. I mean, if this is a large ascending triangle, oh my, that means the measured move. Yeah, this is a fun one. Let's do a measured move. The measured move is the aperture. So measured move. Oh my god. Oh my god. I can't. I can't. I can't. I can't. Oh, it's gross. I don't know. Let's say it breaks out this cycle. Oh, 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 that's so gross. Ew, disgusting. That'd be fucking disgusting. That'd be so gross. This thing's a master node. Most of you don't know what the hell a master node is. Master nodes are interesting. It's not like a Bitcoin node. It's a special Bitcoin node where it provides just streamlined, fast access to blockchain data. And this is successful, one of the few successful remnants of masternode season back in 16, 17. And that measured move on this ascending triangle is just absolutely disgusting. I don't know. That's just a measured move, and I don't have any expectations for it. It's not doesn't mean anything. It just exists. It's an investment, so there's no selling it, and it's going to be as productive as it's going to be, and it's going to become what it's going to become. But that would be absolutely disgusting for a measured move. It's completely unreasonable. Don't pretend I didn't even show you guys this, please. Don't look at these things. Don't look at them. Let's go back to Bitcoin. Something reasonable. Um, would you care to talk real estate prices in relation to higher highs and higher lows and interest rates? So I'm not a real estate expert, but I know a fair amount of things, and it's going to get freaking bad. It's pretty scary. Uh, the thing that scares me the most is insurance and fixed income, and the amount of people, amount of the population that are retired and bought their condos, retirement condos in the 70s and the 80s. $50,000 for 100,000 condos in South Florida, and the whole structure, the whole system is really going to change and reprice, and weird things are going to happen. Because if you bought a condo on the beach in South Florida in 1980 for 60 grand, and you were paying $100 a month in maintenance, and now the condo's worth 750, 800, $900,000, and the maintenance is 1,500, $2,000 a month. Social Security is not necessarily going to accommodate that significant increase in monthly expenditure. There's a great chance that we have some serious volatility in real estate in very isolated markets, maybe all across the entire spectrum. But volatility is going to occur in real estate and traditional finance, in the currencies and the money and the bonds. And it's right now the volatility is low. But just remember, you got to get through low volatility, get the high volatility. High volatility will return. The reason why these markets are outperforming is because the volatility is low. I described to you uh, in streams maybe a year or two ago stagnant money. When money is sitting dormant and things start to appreciate, it starts at the margins, starts slow. But if you have money sitting, you're going to deploy it. But you can only deploy it if the volatility is low, if the risk is low. So that's why the damn move indicator is so crazy. Um, you, you hopefully folks that are getting into the market at least hear these types of conversations. This shit was crazy. Heading into the end of 2022, when the move was blowing out like this, you could smell the fear in the air, and you could obviously smell it back in 2020. But that was just got gross with the monetary distortions and the policy adjustments to accommodate it. But this blowout was gross. Um, and now we're into the cyclical decline. But the next blowout, you can see a big blowout, 250, 300, 400, 500, and the fear is going to be in the air. And when this blows out, you get the fear of deflation, and it's a big fear. And what they've been doing to accommodate that fear is debasing the currency, as Raoul Pal talks about, and I generally agree with that conversation. This is going to roll over. And when it does, crypto markets are going to get freaking weird because what is money is changing. And then what I talk about, what is money, is just the start of the conversation because we don't use money. You use currency. Money makes currency, and it makes it under specific conditions. And those conditions predominantly are lower volatility. What else did you say, Adam? Higher highs, higher lows on the interest rates. Uh, save, can I say for Discord? Refi, with increased liquidity from refi. I I don't like real estate as an investment. It's cheaper to rent right now than it is to buy. I'm a big fan of thinking that is a owning is a privilege at this point, which is an awkward thing to say. It's also a luxury. I've said that. I talked to my wife about that. So it's like, you finance a car, and by the time the next cycle happens, currency expansion cycle happens, you have so much more money, and all of a sudden your monthly finance cost becomes relatively small. So it makes more sense financially to probably manage your capital with that perspective. Therefore, it is a luxury to own things and to pay them off because that financing cost seems relatively small if all of a sudden your income 10x's. But so that's an interesting conversation because that's how weird things are going to get, where it becomes just much more reasonable and rational to potentially just rent things, to finance things, because your income nominally will just increase by that much. Interesting conversation. That uh, auto combo extends obviously to real estate as well, just an order of magnitude greater. What's wrong with making smaller investment that may only produce 6K per year? Nothing. This is a great point, everyone. 30% is 30% to a 21-year-old. 500 a month is significant. What am I missing? You are missing nothing. Thank you. Thank you. This is a conversation of expectations. This is a conversation of geographic location. This is a conversation of age, which plays into expectations. You're goddamn right. This is exactly one of the most important points that I try and express. You're right. And when that 6K per year turns into 60K per year, and then that 60K per year turns into 600K per year in a decade, and you're in your 21, you have a decade. If you're 60, you don't really have a decade. If you're 50 and 40, you kind of have a decade, but it's a little different than a decade when you're 21. Now you're MN. That is an absolutely astute and excellent point. So, yes, a lot of what I talk about is applicable to a smaller portfolio and a younger person. I'm 40. The equation is different for a 20-year-old. You have so much more time. But you got to change your expectations. When I was 20, 6K per year. So it depends on the person. But that's a very interesting conversation. Cap with hat. I was thinking about making a stablecoin. Like, deploy it on a relatively cheap chain, Arbitrum, Fractal. I think we're getting to the point where at some point I'll make something because I'll have the tooling that makes it easy. And I think I have a high level train of thought. I don't program low level. I know assembly language from college and whatnot, but I program in Kotlin, and I could. So I like the higher level languages where I can think conceptually. So as it becomes much more abstracted and you're able to program smart contracts safely and predictably at a higher level, oh yeah, I'm going to have a lot of fun producing some sort of monetary policy, something reflexive. I was thinking about like a reflexive V33. I mean, throw a 5% tax on meme coin that just buys into Raw on Fractal or Ramses on Arbitrum. You can't really do it with Curve because it's past the threshold, and you're not going to really own much Curve to affect the gauges, but you could surely do it on the smaller chains. And there's always going to be a smaller chain. We're just at the beginning. It'll be even crazier in 2027 with how many chains there are. So that could be very interesting because 5% tax on a meme coin doesn't do much if you just rebuying, buy back and burn. That's never worked. We've had plenty of those in 2020 and 2021. But buy back and recycle, where you're using gauge votes to direct incentives. Okay, that could be interesting. So that could be fun. As time permits, maybe you throw something together, and maybe I'll call it Cap with Hat. There's gonna be some crazy memes, probably still yet to come this cycle, but you know, next cycle will get even crazier. Great question, MN. This is what I was thinking. That's right, buddy. That's right. I mean, listen, 6K a year and you are done in certain parts of South America. You are done clearly in good parts of Africa. You never work it again. Good part of Southeast Asia. You're done. That's retirement because that 6K is not going to end at 6K in 2030. Bear in mind that 6K US dollar denominated. Okay. Changes a lot of the equation. And then that 6K is not 6K because that's 6K of value. And then you're managing the cash position. Your cash position is cyclically in varying denominations, Bitcoin, Ethereum, Solana, when it's outperforming. And then you cycle into US dollar stablecoins as the currency cycle rotates, and the currency cycle will rotate. Don't forget that. Snoke, the rationale is appreciated as always. Much pleasure, buddy. I can remember Syscoin and Masternodes, and in one of those live streams last year, I asked about Dash. but with Dash, I'm not sure it will ever reach its objective. No, payment settlement. We're still getting a sense of where settlement is heading. The world is still denominated in dollars, so settlement conceptually, literally, you're thinking in terms of dollars when you're thinking about payment. Whether you're paying in Bitcoin or whatever, you're still thinking in terms of dollars because everything is priced in dollars. So that's not changing. It's not even on the horizon. I don't even see it changing. Not now. And I look forward to it because I usually have a very good change sniffer to see when things are changing. And it's not even on the horizon yet. Excuse me. So Dash, eh, that's just not. It didn't change with the times. Syscoin literally using like 60% of Bitcoin's hash power to secure an optimistic roll up. I mean, literally, Rolex is optimism. It's the speed and everything that optimism has, except it's secured by Bitcoin instead of Ethereum proof of stake. It's pretty crazy, actually, when you put it into very simple, high level terms. DeFi advisors in the house, man, bullish starting according to view numbers. Yeah, things are changing a little bit. I also got X on here now, and I think I'll probably expand to Instagram. Why not? So it's good that I use the StreamYard now instead of just YouTube. YouTube is very stagnant. It has its purpose, but it's starting to turn into what Facebook became, where it's the older generation uses it, and X is pivoting into really what Musk has talked about. It's going to be very interesting for heading forward. You're in the right place, ladies and gentlemen. The Cap is the number one guy to listen to. Thank you. I appreciate it. We'll keep having these talks, and it helps me just as much as it helps you guys. Tape push, old school McMahon in the house. BTC running up to 300K tells more about severe devouring of USD more than anything. Yes, you're correct. Which is why the destination is scary. But everyone's been saying that for generations. Like my grandma, may she rest in peace, always said, "I'm worried about your generation. I'm worried about my kids." You can be worried all you want, just be prepared and understand it. The destination is always civil unrest, social disorder, Mad Max, post apocalyptic scenario. But that's the whole point. That's what the Federal Reserve was created for, to manage social order, and manage, frankly, deflation. Prices can't go down because if they go down, it collapses. So the system isn't what people think. And it's very matrixy. It's very, once you realize it, you start to see it for what it is, and you're like, it's a means of control. And the vast majority don't see it. They never will, and they'll fight to defend it because the goddamn Matrix had the best metaphors for understanding things. It's really crazy. They will fight to defend it. They will get angry at it, and they will fight to defend it. And then the politicians will come up with ways to make the system appealing and seem like they're doing what's in everyone's best interest. And it might get scary at times where they're failing to maintain social order. But then it'll change and it'll pivot. And we've gone through cycles of different types of dollars. And the dollar wasn't what it was pre 1971. Was there $4 in the 20th century in the 1900s? It's four types of dollars or something like that. You could look that stuff up. But the dollar is a different product in many times in history. And currencies are always changing, and the whole point of currency, money, currency, it's not ambiguous. Uh, it's important to be granular with how you talk about them, but generally, money, the whole purpose of it is to ration natural resources. It's only limited natural resources, so how do you ration it without telling people you're rationing it? Oh, consumer price inflation does that very well. Is to incentivize labor to be productive. Nobody's going to do, well, most people aren't going to do work unless they're getting paid. So you're incentivizing people to be productive. All right, check and check. It's doing both of those things. All right. So money isn't what most people think it is, get alone how we don't even use money in the traditional financial system as I define it. Nobody uses money. You don't use currency, and currency isn't money. Money makes currency using credit. That is how you understand traditional finance. Um, in my opinion, broadcasting on X will be huge. Happy to see you. Yeah, I think it's going to be big. I think exactly what Elon talks about. I think just like streaming wars, and we cycled from broadcast subscribers and the cable TV days into granular subscriptions. You probably end up cycling back, and it'll consolidate at some point. But I think news media, like CNN and Fox News, it'll take time, but change starts at the margins. But I think the concept of news and media is certainly going to change in a big way. Within the matrix of economics to control who is the architect. Well, you can think about that. It's an interesting thought, like who's the architect? And the architect is the World Economic Forum. They have very architectural, high level ideas and concepts and methodologies. And it's real. It's because you have the system you have. The system works because it was crafted and constructed. System is a video game. Someone thought up these regulatory bodies, someone thought up these currencies, someone thought up the FOMC and interest rate policy, and thought up the rules and regulate the OCC and the bank policies and how all these systems work. It's a video game. You work your way backwards. We see video games nowadays and we're like, oh, that's new. And I'm like, no, it's not new. This is how we got the system we're in right now. All of financials, all of economics, all of society, as everyone interacts with it on a daily basis and takes it for granted, is very much a video game in modern day terminology. It's the oldest video game there is how do you organize a society? How do you control and coordinate a society? And that's when it gets perverted a little bit with regard to control. But how do you organize a society? How do you maintain social order and civility? That was the third thing with regard to money I didn't talk on. Money is a means to ration natural resources, to incentivize productivity and labor, and a means of financing social order. Why do you think they paid everyone in 2020? Because they don't want people robbing their neighbors. Uh, and obviously, that's because the system falls apart if Publix doesn't have food and ATMs don't have cash. And so airdrop everyone money, everyone's happy. And that's why socialism is so appealing. Complicated topic. I've been here from the start. I'm glad to see you expand. People need your contrarian perspective. My man, tape pusher. It's been a hell of a ride. Snoke Sims. Yeah, yeah. I mean, literally, Monopoly is the most infuriating freaking game ever because it's kind of real. I mean, it's only a limited lens on the way the system works, but it's real. It's infuriating. And The Sims is real. It's a video game, and we live in a sort of video game. Interesting, interesting way to end the stream today. Thank you all for joining me. Monday, March 11th at 1:09 p.m. with Bitcoin way above previous cycle all-time high 72,363. During the stream, nothing has changed. It's all going to continue, and it's going to be an interesting day, and it's going to be an interesting month and year, and we'll be here to tell the story. Tell everyone to subscribe. Stop by the captain on X. I'll be here. We'll be here. And I will see you guys next time later this week. Peace.